morning, it's David here at SPX Capital. Well, we went up yesterday and tagged that 1035 region resistance outlined and sold off hard. Well, hard 10 points. It did leave a fairly ugly candlestick on the daily. It left a gravestone doji, and I think bears are probably going bearalicious. And I actually thought, looking at it, that maybe there's a chance we continue on down here. But the more I looked around last night, the more I became a little bit more cautious on that. It's no surprise really then when I wake up this morning and see the ES trading back up near yesterday's highs. Okay, so we'll come to the ES in a second. Take a look at this daily chart of SPX. You can see I've got my key levels drawn in here. I've taken out the 1035 one. Obviously, that's not quite. It's not quite deserving of amber resistance. The next amber resistance level I've got is 1047, 1048. That's going to probably be deserving of some attention, and definitely not an area in which you would want to go long. That does also represent resistance on the chart going out to the left. So I don't see, just looking at this candlestick, it's quite ugly, but I don't see, based on this high, I don't see the bears as in charge until we close down below the 1015, 1013 region on SPX cash. If we were to come all the way back and test that, you would have to expect some form of choppy action between 1012 and 1047. At least that would be my my expectation. But at the moment on the ES, there you can see here on the daily candlestick, we just take that drawing off, it's no longer relevant. Take all the drawings off, in fact. Delete drawing. As you can see on the ES, we've got this pretty good channel going. We just pop this. I'm going to pop this in for you now. Here we go. So the channel is drawn in, and if we just take a quick look at what happened yesterday, we take or overnight, it's sort of why this zone represented confluence. We take a 50% retracement from here. From that high into this area, you can see that there was a Fibonacci confluence in this 1018, 1021 and channel support. And it's not at this point, it isn't the case that they just bought it to cover. It would appear to me, looking at the overnight volume, and there's actually quite a bit of volume. 29,000 contracts traded overnight is activity of note. They bought it, and what we can see here is that this presents us with a short-term computerized target of 1041, which equates to about 1043 on cash. So I wouldn't be surprised to see us hit this 1041 today and stall somewhat, and perhaps ultimately go on and test that 1041 target. Now, be aware on the long side that the DSI at the moment is showing an extreme amount of bullishness. We have set records in sentiment indicators and sentiment surveys, and yesterday 90% of futures traders were bullish. So that was the backdrop, of course, to our sell-off, as all of those the bullish participants go, uh-oh, maybe we're a little bit overextended here, etc., etc., etc. Airline hostesses are, telling people, look at, there was one trader on an airplane. He was looking at a daily chart of FAS, and the airline hostess tapped them on the shoulder and said, "No, sweetie, what you want to be looking at is FAS." So that's kind of an idea of the sentiment, and China is the backdrop. It does tell you or does show you just how quickly this sentiment can reverse. But shorting is to be done into really key defensible, and I will put defensible in inverted commas, level if you must go short. Otherwise, I think it's just a case of day trade what's on the chart trade what's on the chart, but be very careful on the long side. As I'm making this video, the ES is sitting here and it's really threatening to push out 1035 high pre-market. So that's the setup on the ES. That's the setup on SPX. Remember, for me, the key levels on the SPX, next is 1047, then 1055. If those go, I don't see any reason technically why we don't get to 1085, and if that goes, I think we see a good chance of seeing somewhere up here. This would be an amber line next, 1120. It's very it's very hard to trade long into those kind of sentiment extremes. Because at some point that sentiment needs to be corrected. It's like price action is one thing, sentiment is another. If there was more neutrality on the sentiment surveys, looking at this chart, I'd be a lot more comfortable with long positions. But you just know that the backdrop is a sort of the herd running for the exits all at once, and that's going to happen. We obviously we just don't know where, but you do need to be. I'm going to be prepared for that in my trading. Gold, well, gold suffered a small setback yesterday. It's still inside its triangle on the daily, and I think pretty much every gold bug in the world is looking at this triangle. It did come down yesterday. It came down and retested support again. And was bought up, but the volume on yesterday's sell-off was certainly getting a little bit more sporty. Um, Personally, I never preempt the way these triangles go. I know it's a triangle that's ultimately entered from below, and it's being hailed as we come in, we've entered it, and then started to create this consolidation zone. I never personally preempt the direction of entry or exit, of exit on a triangle. It can go either way. I mean, the gold bugs are going nuts expecting this to break up, but really that was a little bit more weakness than I think the gold bugs might have liked. The dollar didn't move a terrific amount. We'll cover that in a second. Didn't move a terrific amount yesterday, yet gold came all the way back down here. People who are long are getting nervous. Here is the DX. We talked about this trend line here yesterday. It sort of looked at one stage like we were on for getting out of it, but now the DX is again starting to show weakness, and I think 78.40, 78.50 sort of remains the short-term key. But the longer we hang around here, I suppose the more the more suspect you have to be for the bulls, and DSI hasn't changed in the bull. The world and his brother is bearish on the dollar. So like we said yesterday, maybe they need to get that out of their system, and just get another low in on the dollar. I think at this stage it's stand back and just wait and see. As I say, in the short term, 80.50 sorry, 78.50 is the short-term level to watch. I think if we break that, we may see some more covering, but thus far we're just being rejected at that level entirely. Although we do continue to challenge it, and we do continue to make higher lows. I think overnight from the Asian trade, the low was actually the same as yesterday. I've just popped in the this trend line. It's connecting a number of swing lows. I suppose if we take this out, we're going to be looking to see what happens next on 77.39. But if they take out that 77.52, there is a chance, I suppose, that we run down and hit 76. Still one to keep an eye on. Personally, I'm not really interested in playing the dollar short, given the backdrop of sentiment, given the potential for a squeeze in that particular market. So that's everything. Have a great trading day.